April 2nd, which has been marked by US President Donald Trump as Liberation Day. And that day is here and now. And with it, a wave of new retaliatory tariffs that could shake up global trade. The US President has threatened extensive duties on countries he claimed have treated American workers unfairly, with reports suggesting a 20% tariff on most imports worth as high as $3 trillion annually. While the White House insists details are still speculation, experts warn the move could increase inflation and cost US households thousands. With tensions rising and trading partners preparing to retaliate, all eyes are what Trump's unveils next.
April 2nd, reciprocal tariffs kick in.
U.S. President Donald Trump has been calling April 2nd Liberation Day for weeks. It's the day he'll be unveiling an array of new tariffs that could upend the global trade system. Here's what to expect. Trump has threatened tariffs on all countries who, he says, have disadvantaged American goods and workers.
Many countries have taken advantage of us, the likes of which nobody even thought was possible for many, many decades, for decades. And, that has to stop.
White House aides have drafted plans for tariffs of about 20% on most of the $3 trillion of goods imported annually to the U.S. That's according to the Washington Post, which says no final decision has been made. The report also said trillions of dollars made from new import revenue might be used for a dividend or refund to American taxpayers. A White House aide said any report ahead of tomorrow's event is mere speculation. Trump has already imposed tariffs on aluminum, steel, and autos, along with increased tariffs on all goods from China. That's raised tensions with America's largest trading partners and vows of retaliation. Trump argues that American workers and manufacturers have been hurt by free trade deals, which lowered barriers to global commerce. But economists warn that his tariffs will raise prices at home and abroad and hammer the global economy. A 20% tariff on top of the ones already imposed will cost the average U.S. household at least $3,400, according to the Yale University Budget Lab.
And inflation aside, even as Donald Trump said yesterday that India is likely to reduce tariffs, there is absolutely no official word from the Commerce Ministry. Rather, Commerce and Industry Minister Piyush Goyal has said that India's tariff policy aims to regulate trade, protect domestic industries, and generate revenue through taxes on imported and exported goods. In a written reply to the Lok Sabha, he said, while the changing trade scenario, India is moving towards having free trade agreements wherein customs tariffs and non-tariff barriers are reduced or eliminated on substantial trade. Now, India's tariff policy aims to regulate trade, protect domestic industries, and generate revenue through taxes on imported and exported goods, is what Minister Piyush Goyal said. He added that lowering tariffs, especially on inputs and immediate goods and intermediate goods, helps enhance competitiveness of Indian manufacturers. Now, in a separate reply on India-US trade, Minister of State for Commerce and Industry Jitin Prasada said that the government of India continues to engage with the government of United States to achieve enhancement of as well as broadening of bilateral trade ties in a mutually beneficial and fair manner. He also said that industry is being encouraged to identify new opportunities arising out of impact on tariffs on the existing supply chains. Parallelly, imports are being monitored for safeguard measures under World Trade Organization rules, and if increased imports, including from Mexico, China and Canada, cause or threaten serious injury to domestic industry. Well, this is what we are getting from the Commerce Ministry. But what really does this entire Liberation Day and the likelihood of tariffs kicking in today mean for India and the Indian economy? Joining us this morning are two very special guests. We've got market expert, co-founder and CEO of Moneyfront, Mohit Gang, as well as founder and chief economist of Nikore Associates, Mithali Nikore, joining me this morning. Good morning, Mithali. Morning, Mohit. Mithali, let me begin with asking you, What is India's real concern here? Trade of about $190 billion with US that is likely to get hit with high tariffs by the US, or the trade surplus that likely goes into deficit if India goes ahead and lowers tariffs, as Donald Trump is suggesting India would do?
So I think, Karthik, there are three major issues, that need to be worked out. First of all, I want to commend the Prime Minister, you know, because when the Prime Minister was actually in Washington last month, he managed to work out a path for India and the US to go forward. And that path culminates in a target of $500 billion of trade by 2030 between the two countries. So I think that is our North Star, which the Prime Minister and the President Trump have set. And that, sets the tone for the, discussions that happen from there on. So I think that is a very positive development. Now, what are the concerns? Number one, the concern is agriculture. So at this point in time, one of the major sectors on which there are high tariffs imposed by India on US products is agriculture. And the US is looking to export, commodities like cornstarch and cornstarch oil, which it produces in very high quantities to India, right? So that is the first concern. And the second concern for India is IT exports, right? We know that the IT sector and the IT industry, even today, 75% of our exports are to US or US based companies. And therefore, it's very important for us that none of this discussion of tariffs, which is happening on the merchandise trade side, which is happening on the goods trade side, which is affecting more of the agriculture sector, should spill into the IT sector in any way or form. So at one side, we have to protect our farmers and we have to protect our agriculture sector, which is
Sure.
obviously not as mechanized as the US. But on the other side, we also have to protect our IT industry.
Absolutely. No doubt about that. And I think while the IT industry may not directly be impacted by tariffs, Mohit, the view is that the IT sector would be indirectly impacted with tariffs. So, and that seems to be something which is spooking Indian markets right now, that as inflation edges higher in the US in the wake of these tariffs, the demand for India's not just manufacturing and manufactured goods, but even the IT services is likely to get hit and reduced significantly. So what are you really making of the coming months and the coming years if Trump does go ahead and impose tariffs?
Sure. Morning, Karthik. So look, I think honestly, no one knows the exact extent and magnitude of what is going to unfold tonight, right? So at 1:30, perhaps we have a long night ahead. We'll
Yeah.
come to know what exactly and which countries are getting hit to what extent. But it's pretty clear that today we will have some announcements which will kind of impact the global trade balance or the global economy, so to say, right? How much will it impact Indian IT is a very, very far call in distant future, honestly, to right now come to any assessment. My sense is, as rightly mentioned, the merchandise export is something which will definitely get impacted. To what extent, we can't fathom right now. However, IT services might get impact because of the immigration laws and the stringent visa clauses around the H-1B part, which is what the IT industry is trying to grapple with. So if
Right.
India doesn't cooperate to an extent with US, which US wants India to be cooperating, right?
Right.
That's where you see the impact coming in, where perhaps US might impose further restrictions and curbs on the H-1B visa, which is the
Sure.
biggest source of IT companies manpower residing in US, right? So I think that is one big aspect, other than what we are seeing around the developments in the AI world and other things, which perhaps might impact the manpower scenario per se for the entire industry, not just for India, but for the entire industry. So I think from an IT perspective, these are the only two challenges which I foresee. But I think the bigger impact will be on merchandise goods, which I think will only come to know tomorrow morning.
Right, we will get to know tomorrow morning, but Mithali, let me bring you back into this conversation. And the fact is that even though Prime Minister Modi and Donald Trump sort of had their bear hugs and handshakes, and there was what many refer to as a vision laid out for the trade to increase to $500 billion, which you also mentioned just a few minutes back, the point is that there's got to be a road map for that. So will that road map, or should that road map, just speaking pure economics, entail India reducing tariffs beyond just bourbon whiskey? I mean, wouldn't it be nice for us here in India to get access to, let's say, cheaper craft cheese and tuna cans and even cheaper Harley Davidsons for India's own consumption story to sort of kick in? So is there a real case economically for India to cut tariffs?
So I would answer that in two parts, Karthik. One is, let's look at the non-agriculture merchandise goods, and let's look at the agriculture sector merchandise goods. So
Okay.
when you talk about, for example, automobile sector, or we talk about, for example, electric vehicles, or we talk about, as you said, Harley Davidsons, sure, there we can go ahead and think about cutting down custom duties and tariffs. But at the same time, remember that these are goods which are consumed by the richest sections of the population,
Sure.
and is a way for a poor country. I mean, we should still remember that we may be the fastest growing economy in the world, but we're still much, much lower than the US when it comes to per capita income. So,
Sure.
in a way, as an emerging economy, as an economy with high amount of income inequality, this gives us very essential revenue, which comes from the higher income segments. So yes, to some extent, that's the trade-off that we would have to make. But if we do have to make that trade-off, it is still worth it, because at the end of the day, protecting the agriculture sector and protecting the farmers is at this point in time, in my view, the number one priority of the government of India, which they have made it clear as well that they are not going to stop protecting the farmers. And they have never, regardless of administration, the government of India has never given up the interests of the farmers, because the farm sector in India at this point in time, we have our domestic issues, but the stack is completely laid against us.
Sure.
We have the worst impacts of global warming and climate change that our farmers are currently bearing. We have limited amount of investment and resources that we can make to mechanize agriculture, and we have a situation where we are producing goods like wheat and rice, which are feeding the entire world. So frankly, if the US goes ahead and imposes these reciprocal tariffs, it is still them who are, and American consumers who are going to have to pay higher for the wheat and rice that we export. And also, we are not a country which consumes a large amount of corn and cornstarch. So again,
Sure.
if we reduce the tariffs there, then there will be a huge amount of corn and cornstarch dumping, which we risk coming into coming into India, with farmers who are heavily subsidized in the US by the US government to produce corn and cornstarch. So
Right.
at the end of the day, we have to protect our farmers.
Sure, but I mean, when you talk about corn and corn, a primary ingredient that goes, let's say, into Mexican food, India also has the option then to import corn from Mexico. We can, on paper, lower tariffs, but not go ahead and still sign deals with American producers. But Mohit, let me bring you into this conversation, and we are talking about agri, and agri sector is something that India has been ferociously protecting. I remember even early 2000s, if you remember, when late Arun Jaitley was finance minister, in fact, even trade and commerce minister, if I'm not mistaken, at WTO conferences way back in Cancun, India's agri sector had been the bone of contention, and India had ferociously defended India's agri sector. But apart from the agri sector, we also have India's auto industry, India's pharma industry, which likely stand threatened with imposition of tariffs by the US. Now, my question is, does the US have other equally competent trading partners who can offset these India imports if India does not lower tariffs? I mean, for the US as well, there is going to be some sort of a lock-in when it comes to countries that it needs to procure components from. Specifically, auto, pharma is what I'm talking about, Mohit.
Got it. Look, I think honestly, India will relax some of these duties, Karthik. My
Okay.
sense is we should perhaps, and taking a cue from what Mitali was saying, we should not be so steadfast about few give and takes on this relationship. I think it's a relationship where we have laid out a path of over $500 billion of trade relationship. So I think we have to just lowering on a Harley Davidson or lowering on some, let's say, a Tesla entering Indian markets. And I don't think so this is going to impact the Indian market. It's going to impact certain companies at a very high level, certain consumers which are in the premium side. But overall, I don't think so. This is going to impact too much. Does US have another options globally? Yes, US will have another options globally, and so will India, right? So as you rightly said,
Those
India can perhaps
options.
look at.
Mohit, sorry to cut you off, but what are the options US has? It has imposed tariffs on Mexico. It has imposed tariffs on China. It has imposed tariffs on Canada. The entire European Union is likely to be hit with tariffs. Now India comes next. So US is also technically running out of options, right? If you slap universal tariffs across the world, you still got to fend for yourself and import from somewhere to feed your population. And I think India is fairly well positioned to service that need of the US.
Exactly.
Look, I think it will then become a case of which global country or which country is more desperate to kind of boost its state. So let's say assume US were to raise tariffs on Indian pharma and pharma specifically because you mentioned that. Right now, US will need certain capabilities to whatever import pharma products from India. Now the people who are importing in US, they will have two options: either to raise their prices and deliver it to the US consumers, then because US is imposing tariff, which means the goods are getting costlier out there, or they would have an option to ask India to share some part of that burden, which is the increased cost in the US market, which means the Indian exporters out here kind of reduce their margins or kind of share some portion of the burden. How this entire balance will get how this entire thing will get balanced is anyone's guess. Look, honestly, it's very difficult to call out which side will fumble first. But
Yeah.
my sense is it will be a give and take at both ends. And perhaps the relationship will continue to go. And I'm sure US is not so naive as to on some things which are very, very essential to their markets. Let's say a
Sure.
pharma per se, right? Or even IT services for that matter. I'm pretty sure they're not going to let it so loose, or they're not going to raise the tariffs to a certain extent, which becomes unaffordable for their own population and kind of raises the inflation fear, which any which ways is becoming a sole concern in the overall economy out there. That inflation might just peak up and it will kind of lead the US economy to a stagflation kind of scenario. So
Absolutely.
my
And
sense is I
and if
think
US
it's
enters
a give and
stagflation,
take.
it is pretty much bad news for the rest of the world, including India, because then Indian markets and investments into India all take a beating. But Mithali, if I can bring you in, when Trump was sworn in the month of January, the initial conversations we had here, right in the studio on this channel, there was still this little bit of doubt on whether Trump is actually going to complete his swing, follow through with these tariffs, or just use it as a threat or as a negotiation tool. Now, given this whole messaging around Liberation Day, again, speaking statistically, which is part of economics, how high are the probability chances for Trump to go ahead and see these tariffs through?
So I'll actually give you a football reference, which I think,
Okay.
I know nothing about football, but I just know this one term, which is called self-goal.
All right.
I feel at this point in time, what President Trump is doing a few self goals, because honestly, when Mohit was saying, I'm sure that the U.S. administration is not going to let pharma prices and medicine prices go above a certain amount. Honestly, can any of us really predict what he's going to do? And at this point in time, very honestly, when I'm speaking to a lot of economists who are based in the US as well, and we have been discussing, there are a lot of people who are putting the probability of generalized inflation crossing 5% in the US economy, which has not happened in the last decade, at a possibility of over 30%. So there's a number of economists basically across the US who are saying that the US is now staring at a scenario where there could be generalized inflation. And I think, Karthik, coming to your question of what are the options, to be very honest, I am foreseeing a scenario, and I think a lot of economists, trade economists, are actually talking about this, where we could see a complete re engineering of supply chains, where several large companies, for example, re engineer their supply chains to supply to the rest of the world, where there's a
Sure.
certain rules based trading order, and to supply to US markets. And there might be, see, how the US might benefit is through onshoring. A lot of auto companies, for example, might say, what, the US market is large enough for me to go
We'll
ahead
set
and
up a plant
invest in
there.
Detroit and just onshore. Same
Sure.
with the pharma sector, because these are sectors which are essential. But this will take time, and in the short term, if the tariffs continue the way they are, some amount of that self goal which I spoke about is going to hit the American consumers.
All right, I want to stay with that analogy of football and self-goal, Mithali, that you introduced us to, and take this question to Mohit. Mohit, does it seem that Donald Trump is willing to take a few self-goals right now to and perhaps lose a few interim matches, inflation being one of them, stagflation being another one, but eventually coming victorious out of this tournament in the race to remain the sole global superpower in the world, considering especially what US is trying to do now with secondary tariffs on countries that import Russian oil. This is going to not just hit Russia, it's also going to hit China, it'll definitely hit India as well. So how do you see this whole strategy of the businessman Donald Trump playing out?
Look, Karthik, I think in economics is always a very fine balancing of few things. Honestly, if because of these measures, let's say US is able to export more, right, which is what the Trump administration is trying to do, basically trying and asking the other countries to reduce the import barriers so that the US can be a larger exporter in their scheme of things. My sense is even if they move from X percentage to a certain percentage, it will always be an increase in the US exports, right? Which will kind of help the dollar, which will kind of help the US economy. Uh, the inflation scenario in US, I think honestly that the markets have been predicting for a fairly long while, because if you see the US 10-year yield, there's been almost 75 bips of rate reduction in US last calendar year. But the yields have not eased off from a high of almost 4.75. They came down to 3.75. They're still hovering around 4.2, 4.5 levels, which means that the market is already pricing in is a lot of inflation out there in the US, and that's the reason the yields have not been easing off. My sense is we will have to wait and watch for next 6 months to figure out as to how much impact it is having on the US exports. Are they able to significantly increase exports by asking other countries to lower the tariffs? If they're able to do that, then perhaps a larger goal of Trump administration will have been achieved. However, if the impact is higher on the domestic side, which means that the inflation is shooting up and they're not able to export as much, then I think perhaps the US economy goes into a tailspin. And I think it's very difficult to call out which side the coin will flip right
Yeah.
now. My sense is we got to wait for another 6 months to figure out what actually happens in this saga.
Right, so 6 months is what we'll wait for. Mitali, thank you so much for joining us today, this morning. Mohit, do stay back for just a minute or two. Let's quickly get a mood check of where markets are opening this morning. It's been just about 10 minutes or so since the markets opened, and it seems that we are off to some sort of a green start this morning. Nifty and Sensex are both up. Marginally, one would perhaps call it a gap up opening today, especially after the kind of crash that we saw on the main frontline indices yesterday. The story for the small cap seems to be a little darker today. Nifty small cap 100 is down about 0.4% or so, but Sensex and Nifty holding up fairly okay for the first 5 minutes of trading this morning. Well, we never know how things are going to pan out from here. Remember what happened yesterday? Markets opened marginally higher, and then the kind of crash that we saw has wiped out some estimating as much as about 3 lakh crore rupees or so of investor wealth. Let's quickly also look at the Nifty 50 heat map and try and make sense of which are the sectors which are in action today. Well, it seems that the IT sector, barring Infosys, which is up about 1.1% this morning after it lost about 3% yesterday, is the only exception in the IT pack, with HCL Tech down about 0.7% or so. Even the auto sector, Maruti Suzuki is up about 1.18 despite the auto sales data which came yesterday, which suggested that it has actually not been able to live up to its momentum for the month of March, when on a year-on-year basis it saw almost a 1% decline. Tata Motors is down about 1.18%. Remember, Tata Motors owns Jaguar Land Rover, and US happens to be one of its key markets. And this is pretty much the scene today. Reliance is down about half a percentage point. Energy stocks perhaps reeling under pressure with secondary tariffs that may kick in if Donald Trump goes ahead and sees through what he started off by saying is his Liberation Day and the US's Liberation Day. Mohit, what are you making of the sectors and stocks in action today and the mood of the market?
Yeah. Karthik, look, I think clearly the screen is indicating a shift towards the large cap safety for the day, right? I think as you see, the mid and smalls are a little down, and the money is finding safe cocoon right now before the big measures tonight are announced. And I think it's for the day today. I think it might just be an easy day for traders. They should just sit it out.
All right.
My sense is without taking a directional call, because you never know which way the wind will blow. But perhaps there will definitely be tariffs coming in, right? To what extent, what magnitude, and on which country, how much is the only thing which we don't know as yet. But they would definitely be. I don't think so. After so much of hullabaloo around it, the administration will not announce tariffs tonight. So they will definitely. They have a larger press conferences, Rose Garden today, and the entire Trump cabinet is going to be there. So definitely tariffs are coming in, and that's the reason why we will see a slow day of trading today. My sense is very difficult to take directional calls today, and perhaps large caps and finding cocoon out there is the only best solution.
All right, Mohit. And if tariffs kick in today, do you think we can price in the fact that if the Liberation Day, the retaliatory tariffs kick in or reciprocal tariffs kick in today, then the auto tariffs will definitely kick in tomorrow, and subsequently we cannot rule out the secondary tariffs on Russian oil importers also kicking in?
Possibly, yes. Look, I think my sense is they will go through the entire drill once and perhaps then roll back or then reduce the impact or severity of it. But my sense is because they've announced it at such a large scale to the entire world with so much of fanfare, my sense is US will go ahead and do implement all these measures unless the economies blink first, which means unless India kind of comes out with a package and kind of reduces the tariffs on some US goods, or maybe does an MFN status with US and kind of cuts out a separate trade deal. You never know. But yeah, unless something dramatic happens, my sense is these things are likely to come.
All right, Mohit. Well, let us leave it at that this morning. Of course, we will be tracking the Trump tariffs, the Liberation Day, and the impact on the Indian economy, Indian markets, and all the statements that are likely to come in through the day and perhaps through the week right here on News 9.